A sluggish market with a couple of bright spots. The latest on the online gaming clampdown. Stock news that might influence your next investment, and what a potential US rate cut in September will do. All that and more because it's time for... Another week is another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. The PSEi slipped another 0.5% to 6,281.58 with turnover thin at just 6.5 billion daily. Market breadth was slightly negative at 132 losers versus 130 gainers, while foreign investors sold 1.5 billion net. Locally, profit-taking pulled JGS down 4% and GTCap down 2.8% despite increasing significantly last week after disclosing strong first-half profits. On the banking side, BPI went down 3.5% and BDO went down 1.7%. Investors are also worried that lower rates could squeeze bigger banks' net interest margins as lending rates go down faster than funding costs. But there were winners. The mining and oil index gained 2.3% as nickel miners, Nickel Asia went up 8% and Mark Venture went up 5.4%. Nickel ore prices have been going up recently after a shortage in nickel ore happened due to nickel smelting and processing capacity issues in Indonesia. I think people are curious why there is a shortage of nickel ore when in fact the finished material is actually at an oversupply and the prices are low. So what happened in 2020, Indonesia banned the exports of the raw nickel ore, the rock, because it wanted, the Indonesian companies to actually go up the value chain and sell the end product, the processed nickel. So what happened was, because of that, a lot of companies invested in nickel refining capacity. So now there is a lot of that capacity, and the problem is there isn't enough nickel ore because Indonesia is one of the major exporters of nickel ore. Philippines is another major exporter. We don't have as much refining capacity. So what's happening now is we actually have to export to Indonesia so that all their refining capacity will continue operating. So the ore prices are really going up. So now we don't know how long that will last. There is a bit of hesitation as to up to when will companies like, Nickel Asia, Mark Venture will benefit from the ore shortage because, these refiners may end up losing money and decide to just close shop. Property companies and REITs, Ayala Land, RCR, A-REIT, M-REIT, and MegaWorld also outperformed. The driver? Lower yields as the 10-year bond rate hit a new year-to-date low at 6%. This as bets of a BSP rate cut happening this week and the possible inclusion of Philippine bonds in the JP Morgan GBI EM Global Diversified Index in September.
So what is this JP Morgan index and what's the significance if the Philippine bonds are added?
Okay, I think this JP Morgan index is one of the widely followed index as far as bonds are concerned. If a bond is included there, you have a lot of passive fund managers who will be forced to buy the bond. It's quite similar with what happens in the Philippines when a stock is suddenly included in the index. The share price goes up, right? If a bond is added to an index, especially like a widely followed index, then the price of the bond goes up, and when the price of a bond goes up, it means the yield goes down. Gold miners are another group poised to benefit as lower interest rates have historically driven gold prices higher. While we do not formally cover the mining sector, it is worth noting that Apex Mining and Oceana Gold Philippines are among the larger profitable gold mining stocks listed in the PSE. Historically kasi, di ba, yun yung they really use it to pay for stuff. Ay, yun yung pinaka. Tsaka di ba dati, mayroon ngang tinatawag na gold standard. Like, you can only print as much money as gold as you have. One of the reasons why gold is actually going up is because central banks around the world are buying it. It's considered a reserve currency, di ba? Like, gold is a reserve currency. But, now gold is also considered part of your reserves. A lot of central banks around the world are actually buying gold instead of dollars, So that's why they're saying, maybe, there's less trust in the US dollar, diba? Online gambling transactions reportedly dropped 50% after the BSP ordered banks and e-wallets to remove gambling links 2 weeks ago. The problem is illegal operators based abroad in Russia, Dubai, and Cambodia are said to be benefiting and now control 60% of the market. For online gaming firms like Plus and e-wallets like GCash and NAIA, this is a major revenue hit. For consumers, though, it could mean more funds redirected to essentials if the government can prevent the shift to illegal platforms. The controversial Konektadong Pinoy Bill lapsed into law on Sunday, August 24. Tel and Converge say they'll just work with the DICT on the implementing rules. Aside from more intense competition that we expect to materialize, Telcos worry the bill exempts new entrants from congressional franchises, potentially opening the door to players without proper oversight. They also warn that a 1 to 3 year grace period before complying with cybersecurity standards could expose critical infrastructure to attacks. Konektadong Pinoy Bill is an open access bill, so it will in a way deregulate the industry and allow more players to come in. So of course it's a very popular bill because if you have more competition, more companies coming in, then it will make telco services much cheaper. And I think the hope of the government is as well that underserved communities will finally have access to telco services like internet. So that is the hope the government and of course people have about it. Well, for it, the idea is correct. But then again, what the telcos are saying kind of makes sense also because the telcos are subject to the franchise and because of that, they have capex requirements. They're vetted. They had to bid for their licenses, etc. But these new players, since they don't have a franchise, they don't need to deal with that anyway. So in a way, it's kind of unfair. You don't know who these people are and what their intentions are for providing the services. You could have some bad actors out there who are just after the data of the users. And then, let's say they lose money, then they decide to close shop. Then, anong habol ng government, diba? Because they don't even know who these people are. Or maybe, they know who they are, pero it could be fake. We don't know, diba? I mean, it's the cybersecurity really that is the problem. And imagine the strict compliance will not be required until the 3rd year of operations. What if they decide to close na when they hit the 3rd year? Or say hackers are aware that this new telco doesn't have a very strong cybersecurity, then yun ang target nila and then they will attack their infrastructure, which of course is not very good. Converge activated its 1.5 billion peso share buyback program, which is equivalent to around 1.4% of its market cap. After disclosing weaker than expected first half earnings results, the stock dropped by as much as 20%. However, Converge is now trading at only 4.7 times EV over EBITDA, cheaper than PLDT and Globe despite its better growth prospects, being a pure play on fiber broadband. The buyback signals management's confidence and could help restore sentiment. There is now stronger conviction that the U.S. Federal Reserve will begin cutting rates in September as Fed Chair Jerome Powell recently highlighted growing risks to the economy, especially in the labor market. This comes even as tariffs from the Trump administration are still pushing inflation higher. Powell's message: the risks of weaker growth now outweigh inflation concerns. For emerging markets like the Philippines, this is important. A more dovish Fed gives the BSP more room to cut without worrying too much about peso weakness. How will this affect us? Lower interest rates would directly benefit property companies and REITs. Cheaper borrowing costs make real estate more affordable, while declining yields on deposits and bonds improve the relative attractiveness of REITs. That said, risks remain, particularly from the proposed Keep Call Centers in America Act, which could increase office vacancies. Because of this, we prefer property companies SM Prime and Ayala Land, with office rents contributing only 4% and 9% of total revenues respectively. For REITs, we favor C-REIT, which has zero exposure to offices, and RCR, which does have a 73.1% office exposure but is much smaller compared to its peers like A-REIT and M-REIT. It is also set to fall below 50% once parent RLC completes the infusion of 9 malls into the portfolio. So to recap, the market is still sluggish, but property, REITs, and mining are poised to stay strong due to falling rates. The e-gaming sector continues to face regulatory risks. Telcos deal with the new competition rules, while Converge is signaling value with buybacks. All this while we await the potential rate cuts in the US. That's it for this week. Make sure to subscribe to be the first to know what's moving the market. I'm April Tan. Another week is another opportunity. Remember to always invest intelligently.